Right. So I think the Fed has been preparing financial markets for an end in their asset purchases before the end of the year. My scenario up to now was that they would announce it in December and start tapering effectively in January. But I think there's a risk they go ahead in November, so probably a bit earlier, as the job market is actually quite strong, and I think is expected to stay strong in the coming month. So yeah, I think there's a risk that tapering starts a bit earlier, even though I don't think it will start in September because we have a lot of budget deadlines in September that I think makes tapering unlikely then, but there's still a risk.
All right. You're optimistic, though, on the US outlook, on the macro situation there, given a resilient consumer. And I just want to pick that apart a little bit because we had that terrible read on consumer sentiment at the end of last week, dropping to its worst level in more than a decade or so. You say that that's probably a fluke, but we also had retail sales missing expectations just in the last few days as well. Is the consumer really as strong as you're suggesting?
Well, so the U.S. consumer, I think, is resilient, and it will stay resilient in the coming month. I think you have high savings. I think if you look at the savings pile, it's around $2.5 trillion. I think they have, they will probably spend a portion of that in the coming month. Not all, of course, but, even if they spend 10% of 2.5 trillion, that's still enough to sustain growth in personal consumption. And also importantly, the U.S. consumer is releveraging. So credit is picking up again, and I think that will also sustain consumption. So I think the outlook for consumption and therefore for U.S. growth is actually quite solid, even though it is true that in terms of momentum, we're going to decelerate. But I think deceleration doesn't mean that we're going into a slowdown in U.S. growth. Yeah, we are going into a normalization, but doesn't mean that we're going into a slowdown.